Good morning, good afternoon, good evening from wherever you're watching from. Welcome back to the channel, everybody. Today we'll be looking at 3 steps to price action trading. Many a times traders find it very difficult to get good entries when trading forex or indices or stock market. And by this video I will be showing you the best way to enter the market using price action and candlesticks. We all know that market moves in trends, okay? Market moves in trends and consolidation. So as you can see here, we have consolidated area here. Can you see? Consolidated zone. Then market trended. The market was in a trend motion, and then there was another trend reversal. Can you see? So the market can either trend down, trend upwards, or moves in consolidation. This is what we all know, right? And how do you know a market is trending down? It's trending down when it's having lower lows, okay? Lower lows, lower lows, lower lows, lower lows, and lower highs, okay? And when the market is also having higher highs and higher lows, then you know that the market is in an uptrend motion. When the market is retracing and giving a horizontal pattern mode, then it shows that the market is in consolidation mode. So which mode are you supposed to trade? It all depends on your strategy, okay guys? It all depends on your strategy. So in this particular video, I'm going to show you how to find very good entries using particular pattern I'm going to teach you here. But before you can trade either the consolidation mode or the downtrend or the uptrend, you must have different skills to analyze the market in a different way, okay? You must have different skills to analyze the market in a different way. Anytime you want to check the market, anytime you want to trade the market, after you've checked forexfactory.com for any news update and you've checked your currency strength meter to see which currency is strong and which currency is weak, before you can enter the market, you must use specific patterns, okay? You must search for specific trade patterns. So if you don't have any pattern in your head you're going to find, then you don't get any trade entries, okay? You must have specific patterns in your head you are looking for on the chart before you can enter any trade. This pattern can be any pattern, okay? It can be channels, it can be triangular patterns, it can be pennant, it can be head and shoulders, and so many more. But in this particular video, I'm going to show you how to use the Z pattern, how you're going to use the Z pattern to trade and enter the market, okay? Very simple Z pattern I've been teaching here. So you're going to use this particular strategy to enter the market. So when you see that these Z patterns are formed, and then you enter your trade. So let's get started and let's see what we can cover in this particular video. The Z pattern is a strategy used to catch new trends and also used to trade trend continuations. So for you to trade the Z pattern, first you must check forexfactory.com to check for any red news, okay? Do not trade when there is red news, guys. Do not trade when there is red news. I've always been telling you, because if you trade when there is red news, let me go to the chart and show you something. See, look at this zone. You see how the market was very erratic? See this side. Can you see, guys? Can you see here? The market was very erratic. All these ones were news events. So most people don't know, and they just enter the market, and then the market, the account gets whipsawed. Can you see? These were all news events. So before you can trade any forex market, make sure that you check for red news before you trade the market, okay? Because don't just enter the market and then thinking that your setup is going to be red. See guys, can you see? These are all news events. Go to forexfactory.com, check for any news before you enter the market. So before you can trade the Z pattern, go to forexfactory.com and check for red news. If there is red news, don't trade that particular pattern at that particular moment. But if the market is safe and there's no news, then you trade. So go to forexfactory.com, search for news filters, and then now you can search for your pattern on the chart. After you've checked forexfactory.com to check if there's not going to be any news within the moment, then the next thing you have to check is to check your currency strength meter. You check your currency strength meter to see which currency is strong and which currency is weak before you trade any of these patterns, okay? Because you have to match the strongest currency with the weakest currency. So if you don't know anything about currency strength meter, go to one of my videos. I talk about currency strength meter and go and master it before you come and learn even this Z pattern, okay? So after you've checked your forexfactory.com, you've checked currency strength meter to see which currency is strong, which currency is weak. Now the next thing you have to look for is look for a power move. So you look for what? A power move. And what is the power move? You see an up move, power move in the chart. You see a retracement, and then another power move to break the high, okay? To break the high of this particular pattern. When the high is broken, we are waiting for the market to retrace back to this zone, give us a confirmation, and then rejoin the trend up. But if the market does not give us any confirmation, we are not going to take the trade. The same way on a downtrend. On a downtrend, we want a power move down. We want the market to retrace back and then give us another power move down. And when this low is broken, it tells us that down there's a new trend forming. So we wait for the market to retrace back to our zone, and then we take the market down. This is how we trade, guys. Very, very simple. So on the chart, what do we see? we see that the market can be in a consolidating mode. Okay, so after consolidation mode, either the market will go through a trending mode or will go through another consolidation mode. The consolidation can continue, or if the market is trending after a trending market, the market can either go through consolidation mode or directly reverse to the other opposite side of the trend. Like in this particular mode, you can see that after this consolidation mode, the market trended, right? It was trending. After this trend, the market reversed and started a new, completely different trend. Can you see? So it can be from trending to consolidation and from consolidation to trending, or from trending directly to another trending market. Guys, can you see? Or the market can move from trending and then enter a consolidating mode. Can you see, guys? It can move from trending and enter consolidation mode. Guys, are you watching? Can move from trending and enter consolidation mode. Or the market can be trending at the same time, consolidating and messing up. So as a trader, you cannot just be blindly and be buying and be selling. Okay, you must know when to buy and when to sell. So what you have to do is that you must master the exact pattern you're looking for, on the chart before you even think of taking any trade. Because if you don't have exact pattern in mind and then you see anything on the chart, you end up trading it, which is going to give you a lot of losing tricks. So you don't have to do that, guys. You don't have to do that. You have to only search for exact pattern you're looking for. So right now, the pattern you're looking for is what? The Z pattern. You wait for the market to retrace back, and when the market retraces back, you join the trend or you enter here when you have a confirmation candle. But most of the time, the biggest challenge most people face is that sometimes they're able to identify the Z pattern, but they can't tell where the market is tracing up to. Either the market is coming all the way here, or the market is coming just here, or the market is just coming to end here and reverse back. That's a big problem most people face. Okay, this is a big problem most people face. So how do you know that that's the end of the retracement? That is when you use support and resistance. We know that there is always a vertical support, a horizontal support, and also a diagonal support. So for diagonal support, that's why we use trend lines or moving averages. Okay, so you can use trend lines, you can use moving averages. Here I have my 100 moving average, 50 moving average, and then 20 moving average. All these ones are exponential moving averages. I'm just using them to determine my support and resistance, my diagonal support and resistance. I can also use trend line, but I'm not a fan of trend line because moving averages are very dynamic. The market can react to moving averages in a different way, and they give me information more than what trend line can give me. Okay, so because of that, I use moving averages to determine my support and resistance. Listen carefully. Moving averages do not tell me when to buy or when to sell in the market. They just tell me the direction of the market and where there's going to be important support. So I either use moving averages or I either use Fibonacci retracement. So for you to know the market has finished retracing, either it's going to go all the way here or the market is just going to reverse here and go back, you have to determine where is the support. Where is the support? So when you plot 100, if you plot 50 and you plot 20 on your chart, these are the major important areas where the market can retrace up to and reverse. Or Fibonacci 2. We will look at Fibonacci 2 later. So let's see here. On this particular chart, where this market was not there, assuming we had not seen this market, now we are here. How do we identify that the trend is reversing? So we have to enter the trade. Because the market was consolidation, right? The market was consolidating. So how do you know? First, identify what? The Z pattern. And where is our Z pattern? Guys, can you tell me where the Z pattern is? On this chart, can you see any Z pattern? The market is consolidating, guys. Can you see? So where can you show me the Z pattern? Who can show me? Yes, the Z pattern is here. See, we have one move down, and this move took away this high. Can you see? This high was taken. So we are waiting for the market to pull back again and give us another pattern, which means it confirms our Z pattern. Another one here. And then when the market moved a little, see, it broke this low. Now our Z pattern is ready. So we are waiting for the market now we trace back and then we take the trade. So after the low is broken, now we are waiting for the market to retrace back. So how far will it retrace? That's the question. That's the question most people find wondering. Okay, how far will it retrace? Is it retracing all the way back here to this zone, or is it retracing all the way back there? That's why you must always have your moving averages on your chart. The moving averages are going to tell you how far the market is going to retrace. So we are waiting for the market to retrace to any of the important support zones, either the 20 moving average, the 50 moving average, or the 100 moving average, and give us a confirmation pattern. When the market gives us a confirmation pattern, then we enter the trade. So let's see on this particular chart. Let's see what happened. The market retraced to the 20, and we got, can you see, evening star? The star is here. Can you see? This is our pattern we have been trading every time, guys. Are you watching? It gave us confirmation path, which means it will trace up to just the 20 moving average. And then we took the market down. So we enter here, we enter a trade here. After the confirmation pattern, we put our stop loss below the pattern, behind the pattern, and we take our take profit 1:2. Always 1:2 is the max, guys. Do not take less than 1:2, okay? Always when you risk one, you have to take two. Let's say you are risking $100. If you're risking $100, you must always take $200. If you're risking $500, you must always take $1,000, okay? You must always take 1:2. Don't take something less, or don't take something. If you take something more, sometimes you can take something more, but sometimes if you take something more, the market can just reverse back and log you out. 1:2 is a must, okay? 1:2 is a must. So the market will trace back to the 20, and then the market reverse down. Guys, can you see? But the important question is, at this particular moment, you must have the skill to identify the Z pattern. That is the important thing. You must have the skill to identify the Z pattern at this particular moment, because the market was very choppy. Can you see? Always, you're not going to see a perfect market like this, guys. That's what we show on YouTube. We show you the perfect market. So when you go to the chart and you see a choppy market, you don't even know how to identify the trade. Okay, so I'm not going to show you only the perfect market. I'm going to show you at the point where you not even see that there's even going to be a trend. That is when you have to develop the skill to spot these patterns and trade them, because after the trend has already formed, it's easy to tell. But when the market is very choppy, guys, where are you going to find the trend? Okay, so you have to identify the Z pattern first, and then when it breaks this Z pattern, now you wait for confirmation pattern, and you wait for confirmation, and you take your trade. You keep doing this until the trend ends. Okay, until the trend ends. So here it took out the low again. So wait for the market to break, come back and retest and give you a confirmation pattern. But here, look at the market did not give us any proper confirmation candle. Okay, though it retraced back to the 20, but it did not give us any proper confirmation candle because the trend was very strong. So the market just reversed back again. So which means here you couldn't have taken any trade. Okay, though the market went down, but you can't take any trade here because it don't give you any confirmation pattern here. Okay, all this way, the market was very strong. We couldn't take anything. Now the market came all the way here and then started reversing again. Guys, can you see how very simple trading can be? So first, identify your Z pattern, which is up move, retrace, and then another power move. And when the market takes out this high, you know that we are entering a new trade. So wait for the market to retrace back, and then we join the trend up. Very simple. Same as on a downtrend. On the downtrend, the same thing. Power move down, market retrace back, and then breaks out the low. So we look for the market to retrace back to this zone, anywhere around this zone, around any of the moving average, either moving average or Fibonacci. Okay, let me show you the Fibonacci level where the market retraces up to. On this particular setup that we just did, let's see, where was our first entry? This is a Z pattern, right? So our first entry was here, guys. Let's see if that places the Fibonacci level. You go and drag your Fibonacci tool. If you don't know how to use Fibonacci, watch one of my videos and you learn how to use Fibonacci. Okay, so here we drag Fibonacci from A to B, and you're waiting for the market to retrace to C. And as you can see, the market retraced to where? 32.8, 38.2 level. Can you see? So that place was a Fibonacci level. So you can either use Fibonacci or you can use moving average to determine the support, to determine how far the market will retrace. That is where you have to enter your trade. But someone may ask, at this point where the market touched the moving average, this 15 moving average, at this point, would you have entered the trade here? Yes, I'm asking you guys, would you have entered the trade? Is there any confirmation pattern? See, this is the reversal of the pattern you're looking for. See, the reversal is not a confirmation pattern, guys. We can't take a trade here. We want this pattern. The star must be at the top and the candle must be down. And see, what do you see? It is a reversal of it, which means the market is trying to reverse. So you have to be very careful. The next you have to look at is that when the market is able to take this low, then you could have taken here, but the market did not even take the low. See, this low was not taken. Can you see? The market couldn't take the low, which means the market is trying to reverse. So at that particular moment, you spot that the market is trying to reverse. So you have to be patient and wait. Stay out of the market for the market to do whatever you want to do. Either it's going to reverse or it's going to be consolidating. So before the market got to this point, you see that the market will be what? Consolidating at this area, right? Because you had no idea the market is going to reverse, right? I'll show you the chart so you know that the market reversed to the upside. But here, at this moment, you wouldn't know. But at this side, you should know that the market is consolidating. You have to wait. You have to be patient. You don't trade any pattern, okay? You don't trade any pattern. So now we are waiting for the market to form a Z pattern. So can you see? Can you see a Z pattern here, guys? Let me clear this one. Can you see a Z pattern here? Who can show me the Z pattern? Yes, who can show me, guys? Who can show me the Z pattern? See, up move, retracement. Now the new trend is forming, right? I've told you the Z pattern is used to determine a new trend forming. Up move, retracement. So we're waiting for the market to break this high. And when the market breaks this high, see, it broke the high, right? Good. It broke the high, so we're waiting for the market to retrace back. And when the market retraces back, we take the trade. To retrace back to where? That's a big question. Retrace back to one of the moving averages or any support area. And as you can see, the market retraced back to, I think, both the 50 and the 100 and gave, look at the pattern. Look at the morning star pattern. Give the morning star pattern. Can you see? Small candle, a very big candle. 1, 2, 3. And now where will you buy? Will you buy here, guys? Are you going to buy here? I've been telling you always you can wait for a discount. Are you going to buy all the way here, guys? You can't buy there because that place is very far. Let me change the color of the buy entry so that we can see it well, guys. Can you buy here? You're supposed to buy here. Can you buy here? You can't buy there because it's too far. Where are you going to put your stop loss? Are you going to put your stop loss just here? No, your stop loss to be too tight. Your stop loss has to be somewhere here. You have to give your stop loss a little room. Okay, so you can't buy here. You cannot enter your trade here. You have to wait for a discount, as I've always been doing. I've been showing my chart. Okay, you know that I've always been waiting for discount. If the pattern is too long, you wait for discount for market to trace back to at least half of the pattern, where at least you can take your profit 1 to 2. So if you enter here, that's mean you bought here. Now you can take your profit 1 to 2 somewhere here, guys. You must know when to buy and when to sell. You can't just buy here. You cannot enter here because the pattern was too big. You have to be patient, wait for retracement. Okay, the market will retrace a little, though your pattern is ready. But you have to wait for retracement before you enter the trade. So you enter the trade somewhere here, and then you put your stop loss somewhere here. If your stop loss is too tight, the market can log you out like here. Good, as me here, you bought here, you say, let me put my stop loss behind the structure. The market can just come and take you out and continue, right? So you have to put your stop loss somewhere reasonable, and then you buy somewhere reasonable. Okay, buy somewhere reasonable, put your stop loss somewhere reasonable, and you take your profit 1 to 2. 1 to 2 is always a max. So the high was taken, and you realize that there's going to be another power move. So you enter, you join the trend, and then you ride the trend up. But after this particular trade, can you also take another trade? Yes, you have to wait and take another trade. Since the high was broken, see, the high of our trade was broken, right? We took our profit somewhere here, and the high is broken. So what do you do? So while the high is broken, now you are watching, okay? You are watching because this is another high power move. You're watching for market to retrace back to a very important support zone. So we wait for the market to retrace. We waited, the market did not retrace. We waited, the market retrace here. So which means this is our whole power move. Can you see? This now becomes our whole power move. The market retraced back to the 20 moving average. See, it gave us the same pattern, guys. Can you see the same pattern here? Guys, can you see? Trading is very, very easy if you know what you're doing. But if you don't know what you're looking for, then the chart becomes very blurry for you, okay? So, give it the same pattern. So, where are you supposed to buy? You buy in the pattern, or you can wait for a small discount, okay? If it was me, I would have waited for a small discount because this pattern was also a little bigger. Okay, since the 50 moving average was here, I would have just put my stop loss here, okay, and buy here. And then when you buy here, you enter here. What will you take your profit? 1 to 2, okay? 1 to 2. So you take a profit 1 to 2. If it doesn't give you 1 to 2, you don't take. I would have been very lucky. Guys, did you see what I told you? Did you see? The market retraced back. See, this is where my take profit would have been, right? I decided to buy here. 1 to 2 will be somewhere. Okay, somewhere here. So this market actually would have, I would have been out before it retraced. Okay, I would have been out because 1 to 2 will be somewhere. 1 to 1 will be somewhere here. And 1 to 2 will be somewhere here. So we are safe, guys. We are safe. So always, guys, you must wake up every morning, scan your chart, okay? Go through the market, search all the forex pairs, okay? And search for this particular pattern. This particular pattern alone can make it very profitable. Search for the particular pattern, and then you wait for your confirmation candle to be ready. Always wait for confirmation. Be patient, guys. Patience makes a profitable trader. Don't be in a rush to take a trade. Okay, if you know that this is not where you're supposed to buy, or this is where you're going to put your stop loss, it's going to be very dangerous. Wait for the market to retrace back a little. Always wait for the market to give you a very better entry. Okay, when everybody go to the supermarket, they always ask for discount. They ask for discount. When you go to the shop, you ask for discount. But when it comes to trading, everybody just want to buy all of a sudden. Guy, why? Why do you do that? When it comes to trading, everybody just want to buy all of a sudden, but you don't ask for discount, guys. Trading too is the same thing, okay? Just that in trading, you are buying currencies. You're not buying clothes. You're not buying cars. You're not buying fabrics. You are buying currencies. Because of that, you have to wait for also confirmation. You have to wait for confirmation. Wait for discount. You don't have to be in a rush to just take any trade, guys. So every day, open your chart. Search for this particular pattern. You are not always going to see a very perfect pattern like this, very perfect trend. You're always going to see what? You're going to see very choppy area. It's up to you to identify good opportunities in the choppy areas, guys. It is your objective to identify. Okay, when you identify the Z pattern And then when this Z pattern is formed, you realize, yes, now I'm good to go and I'm ready to take a trade. So you take a trade and then you take a profit 1 to 2 or a little more, but don't take less than 1 to 2. Okay, I always advise you take 1 to 2, because 1 to 2, if you get 50 of them to be wins and 50 of them to be losses, then you are very profitable. Let's assume you take 20 trades within the month. If you get 20 trades within the month and you get 10 to be losses, 10 to be wins, you're going to be very profitable with risk reward of 1 to 2, guys. So another question is, on which time frame can this particular pattern be traded? And as you all know, price action is universal. Okay, it's universal. Whether you're trading the M5, M15, H1, H4 daily, they are all the same. Okay, price action remains the same. Support and resistance remains the same. Just that the candle, the number of candles you're going to find in a particular pattern will differ. Okay, so you can trade this on the M15 time frame, H1 time frame, H4 time frame, and even M5 time frame. But I trade M5 time frame mostly with the Fibonacci's. But if you want to trade the moving averages so that the moving average becomes your support, then I prefer you trade with the M15 time frame or H1 time frame if you have the patience to wait for H1 candles to form. Okay, but let's take another example here. This particular moment, the market is also trending, right? From here, you identify your Z pattern. Here, see, we have where is it? We have power move, right? And the market will trace, and it was trying to give us other power move again. But guys, as you can see, it could not take off the high. Can you see? Assuming it took off the high, then we would have waited to enter. It did not take off the high. The market will trace, which means this whole retracement becomes our reversal. So now when this high is taken out, when we wait for this guy to be taken out, then now we can enter the trade. So wait for this high to be taken out. Now this guy is out. So we wait for the next retracement to a very important zone. The market will trace back to the moving average, but did not give me any confirmation pattern, because I wouldn't have taken a trade here because I don't see any confirmation pattern again, guys. Though the market went up, but at this moment I wouldn't have taken any trade here because it does not fit my confirmation. But I think here I got one of my bullish engulfing pattern, or the big shadow. We call something called big shadow. Okay, one strategy is called big shadow. I got a big shadow here, so I would have entered my trade here. I would have entered my trade here, and then my stop loss somewhere behind the structure, and I'll take profit somewhere 1 to 2. That's why I don't care wherever the market will go. Okay, so guys, you must know what you're searching for. That's the important thing. That's the key thing. The key thing is that you must know what you're actually looking for. If you don't know what you're looking for, you just enter the trade anyhow. You enter the market anyhow, and you have losing streaks. You see here, I wouldn't have taken any trade here, right? Why? Because I said it didn't fit any of my patterns. But assuming this market gave me a pattern here, I would have taken the trade here. You see, so you must know exactly what you're looking for, and these are the things that are going to make you very profitable. So as you can see, the market continued to trend, and then it trend upward. So here, the next one, I go on our next power move, guys. Are you going to buy or you're going to sell? Can you tell me? This was our power move, one power move, and then it retraced. Here, would you have bought here? That's the question. Would you have bought here? Though now you can see the market went up, right? But according to our strategy we are learning right now, would you have bought there? Yes or no? Can somebody tell me? You can't buy here. You can't buy because assuming you have not seen the market moving upwards, guys. You have not seen the market moving upwards. You can't buy there. Why can't you buy there? Because our confirmation pattern is not formed. Guys, we can't see the confirmation pattern. See, all the candles did not give us any of our confirmation pattern. Can you see our confirmation pattern that we found somewhere here? Or the morning star? Can you see it there? You can see it. Because you have to wait. You keep waiting. The market was moving and the market moved and left you because your confirmation pattern was not formed. And that is it. Let it go, guys. Let it go. Search for only specific pattern you're looking for. Don't say the market has moved up, so then you get regret and you get sad and you say, I've made a trade. So what, guys? How many currency pairs are there? How many days are there in a year? Can't you just take any trade any day at any moment in time? You don't have to rush in to take any trade. So here, though the market went up per our strategy, but our confirmation pattern was not formed. We did not get any confirmation pattern here. Because of that, we couldn't have taken the trade. So let the market go, guys. Let the market go. Simple. So every day when you wake up, search for this pattern, okay? Search for a specific pattern and then trade them. And when you trade them, you become very profitable. This is Seth over to your trainer for this entire series. Hope you've listened to my advice. Hope you've learned something from this video. So that will be all. Like, share, and subscribe to the channel. And see you next time. Bye.